So what we've seen this month is that the housing downturn across Australia has both widened and deepened. We saw nationally a downturn of 0.7%. But yeah, I think the most interesting thing is that it's now some of those mid-tier capitals, such as Brisbane and Adelaide, that have started to join this wider downturn in the market.
And, the likes of Brisbane and Adelaide joining that, was that expected?
Yeah, it was. We have seen in our data that the momentum in these markets had clearly slowed since late last year, and the weight of these demand side pressures that have built up over time have started to impact these cities as well.
Now, as you said, the overall downturn that we're seeing, and this is the second month of steep falls that we're seeing here in July, are we getting a better understanding as to what's behind it?
We are. I mean, what we are seeing is a market that's adjusting very rapidly. But when we look at the broader factors that are behind this, we see the affordability pressures that were already evident late last year. The 3 rate increases from the Reserve Bank have really hit demand quite significantly. Higher energy prices, the higher petrol prices at the Bowser have hit household incomes. And then finally, we've had this policy shift in the budget hitting investors. So everything has come together and they're all pulling in the same direction.
And, we're speaking a lot about Adelaide and Brisbane, but this downturn still being led by Sydney and Melbourne, as I understand it. How far have they fallen since their price highs? And I guess, how is this comparing historically?
Yeah, so both markets are down over 5% from their peaks. Compared to the history of downturns that we've seen in these markets, it's kind of within the middle of the pack. If we compare it to the last significant move around 2022, that was a very steep downturn as rates would really increase very rapidly off those emergency lows that we had coming out of the pandemic. This time around, it's a more modest downturn in terms of the pace, but I guess the big question mark is how long it lasts.
And I mean, what we're looking at, is this just the property cycle?
Look, it is. That we've seen in all markets, bar Melbourne, really some quite strong appreciation in values over the past 5 years. And, these pressures that have built up on the demand side are a natural response. We are now seeing, obviously, the market moving lower, and it may do so over the next 12 months.
Now, an overall downturn, as we said, are there bright spots within that in terms of property prices going up at this time?
There are a few markets that still show some signs of strength, most notably Darwin and Hobart. These are 2 markets that have very different market conditions. Supplies remain very tight in both of them and consistently low in Hobart. In the case of Darwin, I guess it's really the lack of new building that occurred between around 2014 and 2020 as values in that market really retreated post the mining boom.
What are we seeing in this context in terms of listings? Are they going up or down? What's affecting what?
Yeah, so new listings point to the idea that supply is becoming tighter, that a lot of people are starting to pull out of the market. If you're a potential seller and you have the chance to wait, increasingly people are making that choice, waiting for the market to turn around and to sell in a more positive environment. So that has a way of, adjusting the market as well in terms of the shift that we're seeing. Right now, total listings are quite elevated across the country, but that may start to change if we see this continued decline in new listings.
And if there's a sustained fall in housing turnover, that has implications for other industries, of course. Real estate, building comes to mind. What is the latest forecast as to where these prices will go?
Yeah, so we don't directly forecast the direction of these values, but when we look at the historical trend, there have been 10 downturns over the past 40 years in the Australian market, and they've ranged from around 3 to 8% in terms of the peak to trough moves. Now, some markets have seen larger downturns. Sydney, for example, between 2017 and 2019 saw a 13% downturn. At the same time in Melbourne, it was close to 10%. So there are forecasts out there in the market that are saying that this could be a 10% downturn. It's not completely out of the realms of possibility, but as we say, we are starting to see supply moving out of the market, and that could provide a bit of a floor underneath where values are. It's also very difficult to build right now. Feasibility is already quite challenging given the current values and the construction costs and labour availability. So that also provides a bit of insulation to the market.